You're listening to the Unicorns Podcast.
Today on the Unicorns, we're talking all things cryptocurrency, focusing on what's happening in the Australian market from the perspective of one of the world's largest cryptocurrency exchanges, Kraken. From Bitcoin ETFs through to major financial institutions getting involved with digital assets, 2024 is shaping up to be a big year for the industry. We'll also tackle how Australian crypto investors behave differently to their global counterparts, the impact of scams on public trust, and the potential for regulation of the broader cryptocurrency industry in Australia. Jonathon Miller is the Managing Director for Australia and Rest of World at cryptocurrency exchange Kraken. Jonathon Miller has been at the forefront of Australia's crypto scene since he launched BitTrade, Australia's longest running crypto service provider, in 2013. In 2020, it was acquired by Kraken and Jonathon became the managing director. And Jonathon Miller joins me now. Jonathon, welcome to the show.
Great to be here.
For those that are not overly familiar with Kraken, how do you best describe the business, what it does and how it works?
Yeah, great question. Kraken is a crypto platform. We're an exchange. You can come to us, you can buy and sell crypto. We operate a market, so lots of buyers and sellers come to us and we match those buyers and sellers. We then have those other components of the business that I've mentioned, the institutional arm of the business, which has certain services, institutional grade custody, benchmarks, and the like. We've got a kind of another component of the business which connects people to the staking protocols, which is a whole nother world, but a very interesting feature and very novel feature of the broader blockchain and crypto ecosystem. And we've got a wallet, so if people want to store their funds in a crypto wallet, we can help them with that as well. So we have lots of features and lots of services, but ultimately we're a crypto platform.
Kraken launched its institutional platform earlier this year. Can you tell us more about what institutional clients are looking for and how Kraken Institutional is set apart from Kraken's regular platform?
It's a really big moment for the firm. I think we've been servicing institutions for some time, but as the space has matured, the demands and I think what clients are looking for has evolved, and in a couple of key ways. First and foremost, custody has become a very important part, a very important component, even for an individual, but certainly for an institution. Where the crypto is going to be stored is a big part of the story. And so Kraken has a bank grade, in fact it's a bank licensed custody product now, rolling out of the US. Australians can now use that, but it sits on top of what's called an SPDI, which is a banking license out of Wyoming, and we believe that's a really important part of the stack to bring assurance to clients, especially given what we've seen over the previous years with certain high profile failures in the space. This gives all investors, and in particular institutional investors, the security that they're looking for, the assurance they're looking for custody.
And what sort of institutions are using the platform?
It ranges. So, I mean, for a long time, high frequency traders, clearing houses that work for other organizations, we see banks. The rollout of ETFs has been really interesting development in the space, and we can talk more about.
I was going to ask you about that.
We can talk more about that. But in terms of the client types that are interested in institutional custody, it varies. But those are the core clients that we service.
And how has the institutional adoption of the platform evolved since launch?
So the key thing, I think, is that clients are using more than one service from Kraken, and we have different segments, but we like to kind of consider ourselves as full stack. As I mentioned, not only do we have the custody piece, we've got a deep liquid market, and that's another feature that institutions are really focused on is liquidity. And we also offer the benchmark. So a lot of the ETFs in the market, they rely upon an index to price the underlying asset for their product. We provide that price in many instances. So CF benchmarks are the kind of the pricing engine for a lot of the ETFs. So depending on what the client is looking for, we feel like we can service them top to bottom in our ecosystem, and and around that as well. So things like hedging and other facilities that some of our offshore players can use, our MTF licensed futures and derivatives market, and the list goes on. So we're constantly investing in this stack.
So you've touched on crypto ETFs. Let's get into that a little bit further. How has crypto ETF adoption played out for both retail and institutional investors in Australia?
So the Australian ETFs are extremely new, and so I think it's quite early to say. The markets, like with anything on the markets at the moment, they're subject to many forces, and including more generalised market uncertainty. So I think the Australian ETFs are probably too early to say the success there. We are seeing, however, a huge amount of adoption of the ETFs that are coming out of the US markets, and from what we can see, and it's hard to know because we don't run these ETFs, it looks like there's a lot of retail interest.
What's the attraction?
I think ease of access is one thing, and that's something that we've noted for some time, that when you can visit your favorite platform and select, press a button, that always makes things easier. But also the distribution channels that you get as a result of that. There's been a lot of media, a lot of the brokers can talk about it. So I think that's part of it. But the flip side is that there's a cost. There's a cost for that. And when compared to, say, purchasing, let's say Bitcoin or Ethereum directly from a live market, you have the added costs of the ETF that you have to consider as an investor. So that's something that we always like to remind people, that all the ETFs fundamentally need to source the Bitcoin from somewhere, and those markets are certainly quite accessible, including Kraken's.
Can we touch on the credibility of crypto exchanges and platforms? Trust is a key component of any trading. There are a number of celebrated cases of crypto scams. What light can you shine on this debate in the media? Where does Kraken stand on crypto scams and potential advice for customers?
So, I think the key thing here is more generalized financial literacy and education. That's something that Kraken's really big on. We invest in developing all sorts of materials for people to digest and understand. We put a lot of time and effort up front when it comes to the first interactions with clients around this issue, and we see it over the years that I've been involved in the industry, which is quite a few now. It ebbs and flows, and unfortunately, and I saw in the news today that there's thankfully some crackdown on some of the advertising that people see, the kind of malicious advertising out there. But the key thing is that the brands that have been in market for a long time are probably the ones that you should look to as a starting point. And Kraken prides itself really on being one of those players with a significant amount of longevity, if not the most longevity, formed in 2013 and has been servicing clients safely for that long. So that I think is an important part of the story. The other part of the story is the kind of regulatory piece. And in different markets, and this is where it gets tricky globally, there are some markets where there are clear regulations. There are some markets where there are unclear. In Australia, it's probably 50-50. There certainly are some things you can identify as being in place. Anti-money laundering and things like that are in place in Australia, and we think that's important. But the broader regulatory piece, there's still a gap there. But the key thing is that there just needs to be more education and financial literacy. And if something looks too good to be true, and if someone's telling you to send your crypto to them, and they'll give you 20% a month or whatever the claim might be, I think it's important to remember that's possibly not the right choice. So
look elsewhere.
Yeah. Well, I think you just have to be conservative, and that's why we recommend that clients work with platforms that have credibility, and we'd hope people look to us for that and decide either to store that crypto on our platform or store it on their own devices, and we support that. But asking, when third parties tell you to send something to them, it's generally, be that cash, be that bank transfers, or be that crypto. I think you've got to think twice.
Kraken has a number of different partnerships around the world. It's a big advertiser. Tell us about some of the partners that you're working with.
Yeah, so this is an interesting story for Kraken. If anything, it's quite a new one compared to some of the other players in the market. We have relied on word of mouth and our reputation more broadly, and that's served us extremely well. But we felt the time was right last year to invest in some partnerships with some other brands that we think we have some affinity with, the first of which was the Williams racing team. And racing's an interesting one. It's not a sport that I had been, close to. I'd certainly, observed over the years, and it's an interesting sport. But what I learned about it through this partnership where we sponsor the Williams car, we're on the rear wing of the Williams team, and they're an OG team. They've been in the racing game for a long time.
Forever. That's
right. But what that is a fast-paced, iterative, technological kind of forefront of automotive engineering, and we thought that there was a lot of similarities between the way that they operate, where they're constantly innovating, and what we do in crypto, which is also a ripe space for innovation. So we that was our first foray really into kind of brand sponsorship and marketing like that. But it's been a really excellent exercise, and we had to connect with lovers of that sport, and for our
probably get you to the Australian Grand Prix.
Yeah, I'm privileged enough to go down and see the practice days there, and learn about how they iterate on the car like live. And I think that Formula One fans really there's a lot of crossover there. They're usually pretty technical people, and we thought that was an appropriate alignment. And more recently, we've done some sponsorships with some sporting teams out of the UK, out of Spain, and these I think are representative of our investment in those markets. We have a very strong presence in Europe. We're the biggest exchange in Europe, have been around for in terms of Eurodollars, we're the largest market there. We have a really strong presence in the UK. So these are like important kind of brand sponsorships for us. We're trying to connect with more people there and remind people that we exist in that market the same way that we exist here. We have employees here, we have a footprint here. When you deal with Kraken in Australia, you're dealing with a local entity. The same goes if you're in Spain and the UK and many of our other jurisdictions. So that's part of that story for us, and we're really excited about building on it. In particular, football. Aussies love all sport, and I think there's a fair few
the AFL locally.
The AFL, that's a big... so we've been sponsoring some of the stadiums there, and also the NRL stadiums, just to kind of get our brand in front of people. I think ultimately it's important that people know who Kraken are and that we're here.
You touched on regulation. It's been a big talking point in the US. The election is coming up. What does the regulatory landscape look like, if you can offer a comment, in both America but also Australia?
Evolving. I think that the US, if we talk briefly about it, and I'm not an expert on the US,
Yes.
but I'm connected to that storyline through Kraken. Kraken is a US headquartered company, despite having these big footprints, in other parts of the world. That's where the company is headquartered. That's where it was founded, and so the US is a really important part of Kraken. And it's been a tumultuous time for all crypto exchanges and players in that market. And the SEC has been pretty vocal, and they've been very active when it comes to enforcement. At the federal level, however, there's been no real progress in terms of legislation that covers the US federally. There's been lots of kind of piecemeal stuff, and like in the US, the states are actually significantly important. They've all got their own rules, and so the story there is that there still, I think, remains a bit of a vacuum, and unfortunately, that is also, you could say, a similar thing about Australia. There still remains a vacuum at the federal level when it comes to legislation for crypto-specific legislation. There's the AML CFT regime in Australia, and that is crypto-specific, but outside of that, there's no other legislation. We've been heavily involved with the consultation process, so there's been excellent consultation from the Treasury. There's been a lot of
Are they
talk.
open to hearing your feedback?
Absolutely. Yeah, I think they've done a really great job of engaging with the industry on multiple occasions. And so the problem is not in terms of understanding the space. The problem is getting that translated into legislation. And frankly, I think my understanding of this is that it's really just a backlog issue. There's a lot of legislation that the government's trying to get through, and we're working really hard to try and elevate that as a priority. But I think it's critical because what remains is a gap, and when there's a gap, then other things fall into that hole, and unfortunately there has been some kind of hostile, antagonistic relationship with some of the regulators in this country. Crypto is not really in a supported place, and that bleeds.
Is that a good thing or is that a bad thing?
No, it's definitely a bad thing at the moment, because it means that it's hard for companies, be they local or international, to make a clear judgment call on what they should do in the market. And these are businesses that are investing. These are employing entities. There's talent in Australia that is looking elsewhere. There's local businesses that are going offshore and getting regulated elsewhere. So you get a drain as a result. And I think it's net negative for the consumer as well. So there's great argument here for some prioritization, and it will take some kind of foresight and some leadership, because it's still a small nascent industry, relatively speaking. So getting that as a priority is a challenge, and we're working really hard on that.
If you look at Kraken as a platform and some analysis of the investment that's going through the platform, I understand you've recently done a bit of a survey or some analysis there of what Australians are putting through the platform. There's meme coins, for example. What insights can you share about that analysis? What's going through Kraken?
Yeah, it's really fun to look at what's happening on the platform. We're a customer-centric business. We want to make sure that we're developing products that people love and are willing to promote, that they would tell their friends to use. And then we also like understanding what they're doing, so we can make sure we're servicing the needs. And so one thing we did is we looked at, okay, what are Australians doing that might be the same or different with the rest of our client base? We've got 10 million clients globally. Do the Australians stand out in any way? And they did. There was a big skew towards Ethereum in Australia, and I think that was an interesting insight, one that we certainly have a kind of divergence from the global client base there. And the other thing that Australians were noted for was being faster to the kind of innovation edge. And so the meme coins you mentioned, that they're kind of an indicator. And in my
Would you say riskier?
To a certain extent, yeah. I mean, I think that all crypto carries some form of risk, but I think what's really fascinating is that, from my anecdotal experience talking to Australians, is that they're well across the evolving crypto space, and they want to be close to the edge when it comes to what's new. So it's technology has got high penetration in Australia, a very tech literate country, and I think that kind of plays out when you look at blockchain as a technology and the kind of things that Ethereum represents, for example, as a not just a coin, but as a software, as a kind of global software, a platform for innovation. I think Australians note that, they recognise that, and that also plays out in the businesses that operate out of Australia that I think are really interesting, working in the kind of Web3 space. There's a whole bunch. So we're seeing that reflected in our client base, in their habits and their and what they're interested in, and I think that's testament to the bleeding edge nature of the Australian clients.
Is Bitcoin still the most popular coin?
So Bitcoin and Ethereum are our the biggest assets on the platform by a long shot, and I think that's true for the whole industry. If you look at the market capitalization, the number of wallets, these are the two biggest ecosystems. Yeah.
What happens when your digital currency gets lost? How do you get it back?
Great question. It depends. It depends how you've lost it, unfortunately. So, if you've lost your password, for example, to your Kraken account, you can recover that.
You can.
So we manage the client's account with us, and you can communicate with us, and we can help you.
Because there have been celebrated examples of people losing Bitcoin and on hard drives and whatnot, and
it's still possible.
Diving through dumpsters and landfill trying to find it.
I think it remains an issue, and there are better and better ways for people to back up and have methods for recovering. But if you're game to look after your crypto yourself, and we encourage that, we have a lot of tools, educating people on how to do appropriate backups and how to make sure you can recover lost keys, because in the end, the hardware is only part of the story. It's the key that matters, and that's a conceptual thing that people need to get their head around, that they can basically have a string of words that will give them access to their crypto. It's almost, it sounds like magic, and it kind of is, and that's the innovation. That's the really powerful thing. So really, it's an education problem. I think when people have lost access to crypto, sometimes that can be very tragic, because in some cases, if you don't have the access to those keys, those words and numbers, you can't retrieve it. But that's the security of the platform, though, because if it was easy to hack and recover something, then it would be easy to hack and recover anyone. So it's by design.
Can these platforms be hacked?
You mean the software itself, Bitcoin and Ethereum? We've seen small occasions where certain protocols have suffered hacks, and you see that on the edges of the system. So we've seen that happen with the development of smart contracts, as they're so called, on Ethereum, where the contract itself has been compromised, but the underlying network, the layer itself that supports the development of these bits of software, the Ethereum blockchain and the Bitcoin blockchain have not. So, I mean, there are some old examples of early attempts and early forks. So when you've had, open source software can be modified, and people are attempting to modify it, and there have been some issues in the past, but I think all of those are ironed out. The problem set is kind of a layer up now, and usually on the edges where the people are, unfortunately, that's where the problem is.
Cryptocurrency is known for its volatility. It's going up and down all the time. Do you see that changing over time, or do you think that's just part of the asset class?
I think certain assets will remain volatile by nature of the fact that they're small. The larger the core currencies become, I think the less volatility you will see. Right now, it's a transitionary moment. We've seen, huge amounts of adoption, institutional adoption, as we've mentioned, the ETFs providing an avenue for inflows, the likes of which the network's never seen. But that hasn't yet played out. I think, in terms of volatility, we're still seeing correlation and then decoupling with global financial markets more generally. So over time, though, I think it's fair to say that as these become more and more adopted, there's more and more of a mature outlook on the underlying, and in particular, the kind of arguments for Bitcoin and Ethereum. They're quite different, but they're more well understood now than ever before, I believe. So, yeah, there's definitely a case for reduced volatility in the long run.
If you look at the Australian people using Kraken, your local customers here, what is their profile? Are they predominantly men? Are they women? Are they younger? Are they older? What's the snapshot of the people who are using Kraken?
I think I have to speak more generally than that,
okay.
But I can say that crypto in general skews young and skews male. Okay. But we've seen that change quite significantly over the course of the last 12 to 24 months, where older and female people have been coming to the space, recognizing the concepts, and I think that's part and parcel with the kind of broader, more mainstream adoption of the software in general, and the features that it gets in the news, and the fact that you have ETFs. So I think that's broadening the audience, and we're seeing that reflected in the user base.
And what are the latest figures, Jonathan, on the number of Australians, or the percentage of Australians who have some form of cryptocurrency?
This number varies a little bit, but I think it's pretty fair to say that a third of Aussies have got some form of cryptocurrency. Yeah, 1 in 3, which sounds like a lot. And
12 million people.
Yeah, I think that's
give or take.
Yeah, possibly a bit less, but yeah, I think that's right. And there's a case for more, I would say, because this is technology that really I think a lot of institutions are now seeing as being very important part of them in the mix for not only from a financial point of view, but also from an everyday use point of view. We haven't really talked about that, but where we're seeing a huge amount of investment is in the use of crypto behind the scenes in banking. We're seeing the use of crypto behind the scenes in other industries, for example, ticketing, gaming, these things that people do every day. So as crypto becomes more kind of imbued into the infrastructure of everyday life, we're going to see more and more adoption, and then probably going to see more and more people, have direct contact with it, and that's an exciting prospect.
Let's look ahead over the next 12 months for Kraken. What can we expect coming out of the business?
More of the same, and also different. So I think where we know we have strength is in developing really strong trading tools for people. And that's something that we'll continue to invest in, people who want to engage in the market. But as discussed, as the technology becomes more widely used, we're investing in tools that allow people to use that. So we've got a wallet, for example, that lets you connect with Web3 services. That's a whole nother world, but I think it's where a lot of the internet is going. We have other services on the platform that are more akin to the kind of traditional banking system, with things like custody we mentioned. Staking is a really interesting technology as well. So as the space evolves, we will evolve, but really in the next 12 months, we're going to see doubling down on that kind of core platform, and that's the trading platform.
Jonathon Miller, Managing Director of Kraken Australia and Rest of World. Thanks for coming onto the show, and wish you all the very best.
It's been great. Thanks for having me.
Cheers.